The crypto market has experienced a lot of volatilities over the last couple of days. Most analysts, investors, and traders are blaming DeepSeek AI for this volatility. However, some might not realize that there is more under the cover. This is because, in terms of macroeconomics, there are a lot of news going on in the world. In this video, we will talk about the 3 macroeconomics news that have impacted the crypto market to be more volatile over the last couple of days. Let's get into it. So the first news that happened this week is from Japan, specifically from Bank of Japan, which has raised their interest rate to its highest level since 17 years. As you can see here, according to data from Trading Economics, Bank of Japan's interest rate currently stands at around 0.5%, which is the highest level in 17 years. What's special about Japan is that for the last couple of years, it has implemented a negative interest rate policy, which means people get rewarded for borrowing money. This is due to the government and the central bank wanting people to borrow more money so they can use that borrowed money to grow the economic condition in Japan. The Bank of Japan raised their interest rate from a negative interest rate to 0% interest rate after COVID. This is because the economic state of Japan cannot handle the negative interest rate, because due to low interest rate, the inflation rate went up significantly, even more than Japan can handle. The high inflation rate that is not accompanied by a growing economic condition is what prompted Japan to increase their interest rate. As you can see here, from 2024, specifically from February to March, there's a significant change in their interest rate. As you can see, on February 2024, their interest rate was at minus 0.1%, but then it changed because on March 2024, their interest rate went up to 0.1%. This rising interest rate continued in 2025, where currently it stands at 0.5% after raising to its highest level before at 0.25% on December 2024. This has caused fear in the crypto market due to the trading mechanism called carry trade. Carry trade is not only implied in the crypto market because it is more popular in the traditional finance market. Carry trade goes like this. So basically, an investor from the US will borrow money from Japan because Japan has lower interest rate. This lower interest rate in Japan is beneficial for the US investor because in the US, the interest rate is so high. So what they do is, they borrow money from Japan and then use that money for the financial market to find returns in the US market. The returns from the assets in the US market will cover the interest rate from the money borrowed, but on top of that, they will also earn returns, basically letting US investors earn profit from money that is borrowed, which is basically not their own. This is why when interest rate rises in Japan, it caused fear, and it caused these US investors to rebalance their portfolio, which in turn forced them to sell some assets, which has caused fear in the market, especially in the crypto and stock market, because of the selling pressure. The latest interest rate decision from Japan came at January 24, 2025. This means that it caused volatility in the last couple of days, considering it happened this week. The next news is from Donald Trump, which is the current president of the United States. As you can see here, the tariff imposed will be higher than the current one. This is due to Donald Trump having this policy of implementing protectionism in the United States, meaning he wants to protect his country by putting his country's interests above every other country, especially in terms of international trades. This has caused panic in the market, especially in the stock and crypto market. This is because when Donald Trump last became president, he implemented a tariff policy that caused a trade war with China. When the trade war happened, there are a lot of uncertainties in the market due to economic uncertainties for both countries that have impacted a lot of countries. This is because the US and China are key players in international trade, meaning there are a lot of countries that depends on these two countries. This is why the news caused volatility in the market, and is why for the last couple of days, the crypto market has also been impacted. The latest news that have also impacted the market is the interest rate decision from the Central Bank of the United States, or the Federal Reserve. As you can see here, the Fed has decided to pause interest rate cuts. This means that the dovish policy is no longer guaranteed. The dovish policy was one of the sentiment that crypto investors and traders relied on. This is because if the US economy becomes more dovish, the crypto market might be impacted positively. This is because in a dovish state, people in that country are incentivized to spend. Meaning, when they spend, they will spend more money on consumer goods as well as on the financial market. This is why, when the interest rate cut was paused, people are disappointed because this caused economic uncertainty. Oddly enough, as you can see here, the change of economic policies from the central bank is also caused by President Donald Trump. This is because of the previous news, where Donald Trump wants to implement a new tariff policy which caused uncertainty. As you can see here, according to data from Trading Economics, the US Central Bank has been dovish since the second half of 2024. Currently, the dovish policy still stands. However, it is currently stagnating as the decision was just done on January 29, 2025. As you can see here, the latest decision was to keep interest rate at 4.25% to 4.5%. There's no current target for this interest rate. However, the pausing of the interest rate cut have impacted the sentiment from traders and investors in the riskier asset sector, especially in stocks and crypto. These three news has caused volatility in the last couple of days, which is why if you're trading in the last couple of days, it has been a bit rough. But not to worry, because in my opinion, the storm have passed a little bit. This is also because we're transitioning from January to February. This is because during the end of the month, there's such a thing that is called contract expiry, which means there are a lot of traditional derivative contracts for crypto that is expiring. As you can see here, Bitcoin has its own derivative contracts such as futures and option. These contracts can be separated into two types, which are the traditional one and the perpetual one. In the perpetual contract, there is no contract expiry. However, in the traditional contract, there is an expiry, which means that the owner of the contract has to liquidate their position and then continue to open a new one in the coming month. This is because the expiry usually happens in a monthly basis, which means when a contract expires on January, it can be reopened on February. However, it needs to be closed first. When closing a contract, the trader or the owner have to pay for the leverage or the funding fee, and also they have to pay for their losses and the fee itself to manage the contract from the broker. This means that it creates selling pressure, which in turn causes volatility in the crypto market. The good news is, the contract expiry has happened today. This means that the selling pressure has already happened in the last couple of days. So this means going forward, the volatility might decrease. And as you can see here, Bitcoin itself is already going up again, and is currently trying to reach its resistance, which is around $108,000, which can be a consolidation zone between $108,000 and $101,000. So, if you're wondering why the crypto market has been so volatile, and you're confused as to why DeepSeek AI is taking the blame, I hope that this information and this video is useful, because in terms of DeepSeek AI, there is not much correlation aside from the crypto market being tied to the tech industry, as well as the tech stock market. So, that's all the information from me. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when we next upload. Cheers, guys!